So what we really want to talk about in this first panel is, as I mentioned, thinking about the relationship between the tax professional and the state, the taxpayer, and society. And then thinking a little bit about the regulatory structure behind that. But to get us started, I thought I'd pose the question really thinking about the tax professional and the state. And maybe one way to ask this is to say, what are, and again, the goal today is to think about the ways in which these are positive and constructive relationships. There'll be, sadly, plenty of time in the future to talk about the more challenging, less positive gray into whether it's screaming red or the dark side. But today, think about the positive side of these relationships. And so I guess I'd ask you all, what do you see as the characteristics of the relationship between tax professionals and the state? What's the role? What role does the tax professional play, really thinking vis-a-vis the state in facilitating and supporting, a good tax system, good compliance, et cetera? Henry, start with you.
Yeah, so the AICPA statements on standards for tax services, which are the tax standards that all AICPA members must adhere to, specifically state that I'm reading from the actual standard itself, our self-assessment tax system can function effectively only if taxpayers file tax returns that are true, correct, and complete. A tax return is based on the taxpayer's representation of facts, and the taxpayer has the final responsibility for positions taken on the return. In addition to a duty to the taxpayer, a member has a duty to the tax system. However, it is well established that the taxpayer has no obligation to pay more taxes than are legally owed, and a member has a duty to the taxpayer to assist in achieving that result. So clearly, tax professionals from the AICPA standpoint play an important role in assisting in the proper collection of revenue, but also play a role as an advocate for their clients. And by extension, there is a bit of an adversarial relationship built in to the fact that we are representing the clients and you're dealing with a governmental authority.
Amparo.
Yeah, I would like to point out the idea of public interest, because sometimes public interest is interpreted differently by taxpayers and tax administrations. And at the end of the day, tax interest, public interest is not just increase revenue. It's having the tax system, as you first said, well designed and well applied, and granting justice, tax justice, to all the participants. That makes me think about one comment I saw from Take and Bergeg about the DAC 6 directive, which has been very controversial, and we had a recent judgment of the European Union Court of Justice, and they were saying that an attorney cannot be forced to organize his or her thoughts in the interest of the state, identifying the interest of the state like maximizing revenue. And in a liberal state, it's said here, the rules and the division of roles are more demanding. The legislature and the government set the standard. The administration applies it, as well as the attorney, whose analysis may differ from that of the administration, all under the control of the judiciary. So I know there are differences between attorneys and economists when they are working in tax matters, but I would say, yes, tax professionals should care about the interest of the state, but interest of the state shouldn't be seen only as maximizing revenue. Thank you.
Yeah, so I think it already sort of an interesting set of connections, and I think both you and Henry, if I take those comments together, it is interesting to see the idea of what role the state plays. And for this first panel, I actually broke it out: state, the relationship between tax advisors and the state, tax advisors and the taxpayer, and then tax advisors and society. So I think it is an interesting question. What are the interests of the state and how that might be different than the interests of society generally? And so I think, Amparo, you sort of indicated that a little bit, maybe by thinking about maximizing revenue collection. Now, I'm not sure that's either the interest of the state or society, but I think useful to be separating those out. Nina.
Yeah, I was going to say, in the United States, in our Taxpayer Bill of Rights, taxpayers have the fundamental right to pay no more than the correct amount of tax. And I think that that should be in the interest of the state, in the interest of tax professionals, and it's certainly in the interest of the client. And that should be a groundwork principle. If the client decides to pay more, then that's their personal decision, whether it's a business, whether it's a corporate client or an individual. I think that tax professionals are doing a service to the state when they are taking positions in gray areas that may force the state to articulate their position. And I think that is perfectly ethical and reasonable and helps the overall tax system in that way. And to Amparo's point, to take issues to court is helpful for all of us to see how they unfold. And it also may point out instances where the state, the emperor, is wearing no clothes, that they're just using the raw power of the state to say this is how it should be. And they're not considering the specific facts and circumstances of this whole panoply of taxpayers out there. But again, I also think, and that's why I think Jen's presentation is so important and interesting, is that there have to be those discussions with the clients, because the clients may not be willing to be the guinea pigs for taking those positions. And then you have to defer to your client's interests, even as, you would like to not give up this issue. But I think there's many ways to describe how you work in the public interest, and taking positions sometimes that, the public at whole may think, how dare you do that? But it's highlighting a gray area, and it's bringing maybe a legislative response to that gray area or a judicial response to that gray area, which makes the law improved.
Jens?
I just want to share some outreach activities we had with tax authorities globally, from all over the world, not all over the world, but from all 5 continents. And it was interesting that all agreed that without a tax profession, there would be a mass of loopholes and difficulties of enforcement and application of tax law. So everyone is recognizing that there is a great role for the tax professional, and that is in the public interest, to have someone who knows the complexity, who is guiding the client in a proper manner. The only question and the challenge, and that is perhaps an issue to discuss in another round, is where are the limitations, and where do you have as a professional, and would say, no matter whether you're a lawyer, a tax advisor, or an accountant, I'm all the 3, but I'm not changing my views by changing my hat. So I think it's very important that this role of acting in the public interest is relevant for all professionals doing tax advice, even though I know that in some jurisdictions there's a legal privilege, but it shouldn't be a difference. And knowing from Canada that there's no regulation for giving tax advice, even more, it's important to have a common understanding what the role of giving an advice means. So I think making the client able to follow the law, to understand the law, and making proper informed decisions, that's a role, and that is in the interest of the state, because otherwise there would be the need of having dozens, thousands of inspectors or state advisors to help the client in a complex tax legal system.
Before I jump to our next panelist, I just again want to encourage our attendees to pose questions in the Q&A box as we go along. There's no need to wait until towards the end of the session. So as your questions occur to you, please just send them along. So I have Elaine next, and then Carlos.
Yeah, thanks. Some really good points being made, and this may just be kind of expanding a little bit on one of them. But I think it's also useful for us to remember that there's a huge power differential between revenue authorities sometimes and taxpayers. So again, it's in the interest of the state to have those tax intermediaries be there, because, you know, Jen mentioned Starbucks in the case study, but you have to remember there are small taxpayers that struggle with figuring out what their tax credits are. There are small SMEs that are struggling to keep afloat. And without the advice, they feel like they're up against this huge, powerful entity. They don't necessarily maybe understand some of the tax code in various jurisdictions. So I think tax practitioners do a great job in helping those people feel less powerless in the face of, you know, a letter coming in from the IRS or the revenue authorities in Ireland that, you know, says something. And I know from working in practice, there's lots of taxpayers that the minute they see something coming in from a tax authority, they're really scared and they almost feel guilty before they ever know what the issue is. So I think it's a huge duty to the state and to the revenue authorities that you have that intermediary that sort of balances out that power differential a little bit between the tax authorities and the particularly small taxpayers.
Carlos.
Well, I'll be deliberately provocative while stating a couple of ideas I would like to share. I think that summing it up, what has been discussed so far, we can attribute tax professionals a role of enabling, and that's a provocative word, enabling the rule of law. The tax professionals should act as good faith enablers of law compliance and on ensuring the empire of the law, as the old saying said, referred to. So how does that translate into the tax relationship so far? Vis-a-vis the state, because actually that kind of assertion, quoting or qualifying tax professionals as enablers of the rule of law has implications. And throughout the relationships tax professionals have with all parties in the tax relationship. Vis-a-vis the state, that infers that tax professionals are trusted with the public trust in their skill and capacity for allowing the balance between the parties to be sustained. Not obviously, tax professionals act in pursue or promoting a specific interest that might well be the interest of the state. Think of advisors working for in the legal divisions of tax administrations. I actually was many years ago, I used to be one of them. And you, as lawyer for the tax administration, you provide sound advice you develop your abilities and you exercise your competences, your powers without going beyond the line that the rule of law establishes. And the rule of law establishes limits for all of the parties of the tax relationship. And in that particular regard, the role of tax professionals is particularly important in ensuring that things are done within the realm of the law, and then that all of the interests that Amparo defined very clearly a few moments ago, and Ms. Olsen as well, do not go over the boundaries of a sound and healthy tax relationship that will translate not on more revenue, but on better revenue, that will translate not on harmful competition from corporations on SMEs or whichever whoever is intervening in a particular market, but on better competition and enhancing the capability of corporations on taxpayers to develop their business and provide goods and services that serve the common interest and serve the people. So I would sum it up by saying, and I insist I use this very particular word to be deliberately provocative in this statement, tax professionals can be defined as enablers of the rule of law.
Thank you, Carlos. Yes, a very provocative choice of words, indeed. One of the things I was thinking about as some of you were offering thoughts is, that there's such a mix of both kinds of taxpayers, kinds of taxpayer relationships with the government, and the government is powerful and not powerful in different ways. And how, if you sort of went through each of your observations, it's sort of helping us see one of those threads. So, for example, I was thinking about, the government, especially Elaine, you mentioned, has a real sense of power, particularly vis-a-vis smaller taxpayers, perhaps before you can get to content and substance of any particular issue. But there are also ways in which, the tax authorities, both in sort of drafting the regulations and in executing and enforcing the law, they have limited resources and limited expertise as well. And the ways in which tax advisors can be sort of, through advocacy, be providing them with an understanding of how things are working in different sectors, how they're working for different kinds of taxpayers. And so it doesn't even have to be an unwillingness on the part of the state in enforcement. It's not an unwillingness to hear or learn, but also sort of limited resources in terms of what they're going to see. If you think about taxpayers across every sector, every size, they know their own situation really well. And so, the government isn't going to know each of those sectors, each of those applications as clearly. So really an interesting mix of power and relationships. I thought maybe now I would turn, and we've already hit upon this a bit, because it's, as you're thinking about the relationship and the role of the tax professional, it's never just a one-sided lens. But I wanted to turn a little bit more and focus on thinking about tax professionals and the taxpayers, their clients. And what are all the elements or characteristics of that relationship? What are we seeing there? Some of it we've hit upon, right? So I think a big one that we started off with was really just compliance, really helping your taxpayer effectively navigate the tax world in front of them, so that they can meaningfully comply. What are some of the other dimensions, though, of that relationship that strike you as worth thinking about? As we're thinking about tax professionals overall. A moment to contemplate. What else? Carlos, I'll go to you.
Well, I think I can just build on what I just said a few moments ago. Vis-a-vis taxpayers, tax professionals are a guarantee of them being protected from a legal perspective on, first of all, doing things right, and secondly, to prevent possible abuse from the other side of the equation, and thirdly, and most importantly, helping them maximize their legal tools to achieve their goals within the particular context of society. It's not, within the context of capitalism, and that would lead us to the third panel, it's perfectly fair and it's okay to try to maximize your profits. It's try to maximize your goals. But the problem here, and as the name of this series of roundtables highlights, the problem here is to determine the limits. And in that particular regard, the role of tax professionals is particularly important, is to warn you on, okay, this is a hard line, do not cross it. On the one hand, for both sides, obviously, tax professionals would do that also in front of the state. But also, in general, tax professionals should provide a legal certainty for taxpayers to fully develop their businesses in compliance with the law. I would sum it up that way.
Great.
Yeah, so I think there's a I agree with Carlos to a certain extent, but there's just maybe expanding upon that. I think tax professionals play a role in educating clients about their responsibilities in the tax system. And I know when I was in public practice before joining the AICPA, I always tried to make sure that clients understood the return that they're filing, because ultimately they're ultimately responsible. In the US, you sign a statement that says under penalties of perjury, I agree that this tax return is true and complete to the best of my knowledge. So you do play a role in that. You're being engaged to provide a service, whether it be tax planning, structuring, or just the compliance aspect of it, but explaining to the clients why certain things are allowed and certain things are not allowed is an important aspect of the relationship. And then where you get to these gray areas, educating the clients as to the potential risks and explaining to them what the consequences might be were the governmental taxing authority challenge them, and whether or not they want to assume those risks. Some clients are risk averse. Some clients are willing to roll the dice, for lack of a better word. So making sure that they understand the potential ramifications to the decisions that are being made, but ultimately that the tax professional certainly can't, as Carlos said, can't cross that line. They have to understand what their roles and responsibilities are, but the client also has to understand that certain things just can't be done. And one of the challenges that we face here, at least in the US, is that not all tax compliance work is done by tax professionals. So you have individuals out there, and we have an issue right now within the US on some COVID relief credits, that you have consultants out there saying you qualify for all these credits, where I, as a tax professional, clearly do not agree with that assessment, and I can't proceed to provide the client the service they are asking me to do because I don't think it's correct.
Henry, you've really, I think, introduced some things I want to have us return to in our second panel. Sort of that line between education and then beyond, and sort of where do morals and ethics sort of blend into that. But I'll hold off and wait for our second panel to do that. But Nina, you had indicated.
Yeah, well, this is actually following up on what Henry was saying. I have two observations. One was, we did a study a while ago where we categorized both taxpayers and tax professionals into three kind of attitudinal buckets. And one was, if you can imagine a grid, you've got on one side the tax professionals, and you've got a tax professional that's very much by the book, very conservative. Then you've got a tax professional that's sort of, well, there are gray areas and we can go in this direction. And then you have a taxpayer, as Henry called it, somebody that's, willing to game, or not risk averse, very much a roll the dice. That's the professional side. And you have those exact same things as taxpayers. And so what you've got is the interrelationship between those. And if you have very conservative, very conservative professional, very conservative taxpayer, you may leave money on the table for the taxpayer. They're paying more than the correct amount of tax because they don't want anything to do with the agency. On the other hand, you get both of those dice rollers together, and that's where you may get very close to the line, and what we, or over the line on what is actually legally allowed. What's really interesting to me is that in between area, and the role that the tax professional can play when you have a taxpayer that's sitting on the fence. And if that's where you can maybe really influence behavior through your educational efforts. But I recall many conversations with tax professionals who were trying to do that education with clients, saying, no, you can't, this is how I interpret the law. This is how I interpret how this regulation reads and what we can do going forward. And the taxpayers looking at you saying, well, I just read an article that the Internal Revenue Service audits taxpayers at less than 1%. They'll never find me. And then what's the tax professional to do, and the tax professionals are saying to the government, could you audit more because you're eliminating my leverage with the client. I can't get them to do what's right. And I think that goes to the relation, that's sort of brings the government into that grid, but it's a three-dimensional grid, and that's more than my brain can handle at this point. So
Amparo, did you have something you want to?
Well, it was a couple of ideas following up. One is that the taxpayers that have access to tax professional advice usually are placed in a position where they can take more risks. And this is quite common. So the other issue is profiling, because it's not that you take only one risk, it's that now they have the ability with the technological means to trace those taxpayers who are able to take risky positions. So it can be a way to make using under the radar, for the future audits. And also there is the issue of having teams of experts, because a tax professional doesn't usually work alone, and it's not only the tax consequence that is going to influence the final decision. So you have other intermediaries, we would say in Europe, that are connected, and that makes allocating of the liabilities or responsibilities a bit more difficult in the relationship with the taxpayer. Those were my ideas.
No, and that's so right. Sort of conversation suggesting that it's always the advisor and the client. In fact, the advisor may be, a multi-pronged creature. And so, yeah, great to think about that. Elaine, did you have something?
Yeah, it was just to pick up with that relationship between the tax practitioner and the taxpayer that Nina was talking about, and also just going back on some of the other comments. I think that the relationship is really important, because you're going to have more of an impact on your client, even if you're have different stances, if you have a positive relationship. And I think certainly seeing the tax practitioner in their relationship with the taxpayer almost as a business advisor, because I think as Henry was saying, if you've got, just a compliance issue and the taxpayer only comes to you when they have a compliance issue, it can be too late to advise them on something. Certainly some of the reliefs in Ireland will involve you, for example, holding assets for 10 years if you're looking at succession planning. Now, if you're not there as an advisor to advise your client way back at the beginning, when they start looking, maybe, or before they even start thinking about succession, about prompting those questions and making sure they know that they're not going to be able to avail of reliefs unless they do certain things, 10 years in advance or whatever. So it really is that sort of business advisor relationship, that if you have that trust between the tax practitioner and the taxpayer, and the tax practitioner is also watching out and knows their business well and knows their circumstances, so they know what age they are, whether they have children that are interested in inheriting the business or whatever that might be, then you can get ahead. So I suppose what we try to do with students is to say, look, if you're going to be a tax practitioner, you need to be the one to have that relationship with your client so that you can assist them throughout their whole sort of life cycle of their business, whether it's from startup to expansion to retirement or whatever, so that you're there when they're making those decisions. They check in with you, so they don't make a decision, for example, to put an appreciating property into a company when they maybe should hold it personally or whatever it might be. So the relationship, I think, is really important, and to see the tax practitioner, for them to see themselves as a business advisor involved in more than just the tax compliance piece.
And as you were talking, Elaine, I was sort of thinking about it's actually, when you teased out several prongs that you're highlighting there. I mean, one is, if you're going to have a tax system that's somewhat complicated, then for taxpayers to be in the best position they're entitled to be, and say something Nina mentioned earlier, they need to be advised. And there's just no way they're going to stumble into the most appropriate, legitimately well-planned structure that in a sense the system might envision. And then just with that level of complication, you've got to have your tax advisor sort of walking through life with you. And then you will be there to make the the sort of guidance possible for them. But the other part too, you're saying is if you're there all along, I also, sort of that idea of trust, it sounds to me like you're also saying, and then when you suggest the less than thrilling answer to a tax question, you've got the relationship where they're gonna say, okay, not what I wanted to hear, but you say this, of course, I just go. So really a multifaceted reason that where possible, those taxpayers sort of facing ongoing complicated lives with the tax system really do benefit from that. All right, I thought, as I said at the beginning, that we were talking about the state, and I just asked the question, what's the difference between the state and society? But I did want to try to parse that a little bit more and sort of ask as sort of the last part of our relationship questions, how should we think about the relationship between tax professionals and society? So, if I think of myself more as, I think about the state, think about, the bodies charged with, drafting, enforcing, et cetera. But now I'm thinking about society generally. I'm not necessarily a client of anybody, but what do I think about the relationship? What's the role of the tax professional with respect to society generally, and how much you see that a little differently than what we talked about with the state, or what parts of it would you emphasize more? Jens.
I think it is important to consider, and that is perhaps the Starbucks case an excellent example, because in that case, the state was happy, or all the involved jurisdictions were happy with the structure. But there was a public sense of unjustified advantages, or it was not a proper portion of tax paid. I'm not saying that this is true or not true. I'm not judging, but there is a perception, and that is, I think, very important in giving an advice to the client to look at the wider impact a certain outcome might have, even though it's perfectly legal. And perhaps it's a more information giving advice. Think about you're paying globally or in UK 0.01% corporate tax. It is right, but what are your clients or your customers or your shareholders will say? It's a little bit similar to sustainability issues, which are not legally binding yet in many jurisdictions, but it's an impact you should consider as an entrepreneur if you have wider stakeholders. And I think that is something where the profession has to think about how to address it. But I think there is a relationship which we have to consider.
Anyone else have? Yeah, Amparo.
Yeah, I think that society would trust more tax legislation when consultations with experts are conducted. In this sense, for the acceptance of tax legislation and, well, future acceptability when you are planning the rule, it's good to have tax professionals, associations represented on board, just caring for society interest, not exclusively one taxpayer interest. And that's also legitimating the state as although we give consent to our taxes, no taxation without representation at the Congress, but in the making, it's true that tax ministries have a lot of power in practice, and many of the rules that have been passed in the last decade in many countries have come from governmental debates that have taken place outside jurisdictions in international organizations. So a way to make it more local, I think, and more trustful for a society in a given country is to have a dialogue with experts. And here, tax professionals can play a role, I believe. Thank you.
If I'm thinking about that dimension, which is really interesting because it's kind of very different than some of what we've been talking about. how should we be thinking about that from the perspective of ensuring it's all sorts of voices? And you did indicate you want them not to be tax advisors and experts, not to be speaking on behalf of a single client or sort of a narrow set of interests. So interesting to think about how it is as you're having that kind of professional dialogue, because who else can really speak to some of the more complicated dimensions of it, the professional dialogue with the government, with the state as it's designing it, how that can happen without capture, which it will be for another session. So I don't want to go too far into that, but Elaine, I'll turn it you have the hand up.
Yeah, I think speaking to that wider sort of societal interests, I think sometimes, or in recent years, and I don't know about some of the rest of you, but I think the NGOs have really gained a voice in the last decade or so that I don't think was present before that. And they are highlighting issues of spillover effects on developing countries, you know, the impact of Ireland's 12.5% rate on developing countries or whatever, in a way that I think that voice wasn't as listened to maybe in the past. And I think the OECD efforts as well to look at, you know, the BEPS project and so on has sort of brought some of those issues into the mainstream in a way that maybe the public weren't aware of them before. And that I think is then having a knock-on effect on tax practitioners having to be more, I suppose, aware of those wider issues, if only for reputational effects. And I think Jen's framework that he explained at the beginning, that reputation thing, I think that's a really important piece, because, you know, tax practitioners don't want to be on the front page of the newspaper. They don't want their clients to be on the front page of the newspaper. And I've heard them say that over and over, that sometimes, you know, where, as Carlos is saying, you know, the enablers of the law, I think is one side, but there's also this piece that goes beyond the law that is, you know, it doesn't feel quite right. And I don't think anybody wants themselves, their firms or their clients to be on the front pages these days, because reputation is becoming more of an issue. So I think that's something we could lever a little bit, but definitely I think the OECD efforts and the NGOs efforts have brought kind of spillover effects and broader societal effects into the narrative in a way, I think, again, that they wouldn't have been there maybe a decade ago.
Jens?
I just want to add to Eleni's point. It has also impact on the interpretation of laws, as we all know, that because a legislation made 10 years ago might be interpreted by courts and tax authorities in a certain manner 10 years ago differently from nowadays. And you mentioned structures in a family business, from a startup to a broader succession story. Also, the interpretation of a structure of an advice, is it legal, it's gray, is it green or red, may change. So the tax advisor must know and understand what is going on in a certain jurisdiction, and even more important if you're going cross-border, because there might be a different societal discussion on a certain issue. You mentioned NGOs in Europe, which have a great influence on legislation, and probably also on judges making their rulings. So I think looking broadly is very important, and that is an educational issue for the profession to be prepared, not only be a proper technical advisor, but being a real advisor, having this scope, broader scope. I think this is very important.
Nina?
I think that this highlights the, going back to the very beginning, the duty to the system and the duty to the client. And I think that's where tax professional organizations can create trust, instill trust in the system while still protecting their clients' interests. Again, it is abhorrent to me that any taxpayer would pay more than they are legally required to pay under the law. That to me erodes the rule of law. If the public thinks the law is wrong, then the law should be changed. And that's the role that tax professional organizations, as well as other you have this dialogue among organizations. So organizations that say, well, the law should be changed, the tax professional organizations can come in and say, this is what we've observed through our clients. This is how it can be changed to achieve these goals. And they bring that expert perspective into the discussion and affect systemic change. And I think that enhances trust in tax professionals from the public's perspective, rather than seeing them in the pocket of well-paying clients to achieve some result. Whereas they may be paid by their clients for a specific result, the systemic change work can be done, at that much higher level, and to Ampara's point, in conjunction with other groups, while ensuring that taxpayers don't pay more than they are legally required to pay.
No, that's really, that's helpful. And think about the dynamic between tax advisors and the state as being a way in which tax advisors may be advancing their role and their participation in society. So that's really helpful. One thing I wanted to ask, and I'm not sure there's I'm just curious if you all have a reaction. It may also kind of move us a little bit towards our second roundtable, our second panel today. But it was a couple of threads in everyone's comments thinking about the role of the advisor in helping a client anticipate what happens beyond formal compliance, and what else they may need to incorporate. And I think the reference to ESG made a lot of sense. That really is kind of one way of thinking about the kinds of questions advisors might be raising with their clients that go beyond formal tax law and might be directed more at society and what society thinks more generally. I guess the question I have is that role for the advisor merely helping the client or the taxpayer with perception and sort of just kind of a strategic good press, or is there a way should we think about it in terms of being actually furthering some dimension of sort of democratic values, or sort of how to see that advisor role as more than just an additional PR function with an expert in the tax arena? Do you have any thoughts? Amparo?
Well, one thought, but very limited, because I haven't had too much time to try to answer this question. But in my view, I think that would be relatively easier in big companies, because you have a corporate social responsibility department that you have to talk with, even if you are in the tax world. And they are used to take care of impact on society. So that could somehow include in-house care. But I don't know if the strategy could be implemented elsewhere, because you lack the resources sometimes.
Well, Carlos.
Well, I think in some adding up to what Amparo has just said, I think that even the smallest of companies is engaged in and actually cares about their PR somehow, even though they might not have a PR department or a corporate social responsibility department, but they have an image to their customers. They have an image within society that they want to care for and to prevent from any form of damage. I think that actually the point raised by Professor Ring connects with panel number 2, because in the end it depends on the ethics of the tax professional involved in such a way of devising advice. You can, as tax professional, you can look at things as, okay, let's get to this in a way to help you save face somehow, and then enhance your position, the brand, the position of your brand within the market, playing the nice kid in the block. Although that conduct might not be as ethical as from at first hand you may think of. The thing is, here is a very deep ethical component in the tax profession's behavior. It's not a way of just help enhancing the position of your client just for the sake of it, but you do have an ethical responsibility with society to do that in a proper and loyal way to both the society and the state. And that actually connects with my first participation, and I insist in this enabling role. I know I'm being provocative with that word, in this enabling function of tax professionals.
Thank you. Daniel.
Yeah, Diana, it seems to me that your question is getting at the motives of the client. And the question might be, what are the motives of the client? Are they to manipulate their public image for profit, or to have a sincere caring about society in general? And I would pose that people are complicated, and they respond to multiple motives. People are both altruistic and egoistic at the same time. And if, as a tax advisor, if you can point that out to the client, that yes, we understand that we're here to make money, and manipulating our image is good for the bottom line. But we also all want to be thinking well of ourselves, to work in an organization that we can be proud of, is going to be profitable, but it's also going to be the right thing to do in and of itself. And to think of people as being completely self-interested and completely egoistic, I think it's wrong. And I think that to appeal to people as only altruistic is not going to work either, because that's not the way people are. So you need to recognize the complexity of human motivation.
Yeah, that's really helpful. And I think all three of you really hit upon some elements that will be really great to kind of return to in the roundtable. And then Daniel, your very last point there remind me of Elaine's. If you've got that long-term relationship, you can have these more complex conversations with your very complex clients, as they well are. So we have about 14 minutes left, and I just want to take this time to turn to actually the second part of our sort of set of questions and topics for this first panel, which is sort of regulation. And I guess I'd start out by saying, or asking, why tax professionals should be members of a regulated profession, and that's sort of maybe what are we getting from that? Why is that important? What do we want to see from that? Jens?
If I may start, I think we talked a lot about education and the obligation to be qualified. So that's in the public interest, that the advisor has a proper skill and licensed and renew the knowledge. And I think also an experience out of our project was that the main problem in so-called aggressive tax planning is a lack of education of certain members of the profession, I would say, because they were trained in a time where certain things were acceptable, which have changed in a very short time period. And for example, this is just an example, a regulated profession is able to exercise and to enforce such kind of development. And you mentioned ESG. I think that is something which is part, because also sustainable taxation in many jurisdictions is an issue, and understanding this new type of elements, I think is something which is important. But another point is we discussed about trust into the profession, and trust is on the one side a very personal relationship between client and its advisor. But on the other hand, there are also some perception issues. Having the possibility to give your opinion on certain actions by a professional to a professional body, where there is a regulation which makes enforcement decisions, with disciplinary decisions, etc. I think this is also building the trust in a profession, even though such cases, if they're going to court, and the first step, questioning whether the professionals have acted in the public interest or properly, but in the end, bringing this to a proper process is something which is building trust. And I think these are two elements. There are more, but just to start.
Thank you. Henry?
Yes, leveraging off what Jens has said in connection with the education and the standards that tax professionals, if they are part of a regulated environment, have to adhere to. You know, within the AICPA, just like within the American Bar Association or other organizations, there are codes of conduct that we as professionals need to adhere to. There are certain governmental regulations that we also must adhere to. But what we try to demonstrate that and attempt to remain a self-regulated profession, and we can hold our hand up and say that we have this code of ethics that we need to adhere to. We adhere to that. And when members do not adhere to that, they are properly investigated and ultimately disciplined. And that clearly will give confidence to the members of society that you are engaging a competent professional to assist you in your tax compliance and tax planning work. Without those type of regulations in place and without those code of ethics, and I know that there's a challenge within at least the US, there's a bit of a move to disavow or dispel or dissolve any type of regulations in certain political bodies, and that would be very problematic.
You know, picking up on that, and maybe to you, Henry, but to anyone else as well, that would clearly be a goal of both professional regulation and the role of the professional bodies themselves, sort of playing those functions of, you know, of drafting, of guiding, of discipline. You know, are our current sort of regulatory disciplinary bodies sort of up to that? That is sort of, how do, you know, what does it need to look like to really have that kind of confirming, confidence building effect for society? Are we sort of there? I mean, how do we know we've hit enough? And I think that relates a little bit to Jen's question. We see, you know, when cases are being brought, it makes it look like, wow, nobody's doing what they should. Now, eventually it does get through perhaps the, you know, the professional regulating body, but is there enough? Are the bodies able to handle it? Are we asking too much of them?
You know, I think it's a constantly evolving situation, and one cannot stand pat and say, okay, we've done enough here, and not take into account the changing nature of tax law and the world that we live in. And, you know, the statements on standards for tax services that AICPA members adhere to, we underwent this revision process for that primary reason, to make sure that the standards are still relevant. And are there things that when these standards were originally developed, they weren't something that you would take into account because there was no need for that? So it is a situation where these regulatory bodies have to continue to evolve and reflect the needs of practitioners to assist their clients in providing the services that they do.
You know, how do you all see whether it's the complexity or the vagueness of tax law impeding the work of the tax professionals, and, you know, and putting sort of greater burdens on their own sort of self-regulation? Sort of, you know, how does the actual tax law itself, you know, affect their role, really?
I think it's incredibly challenging, especially over the last 3 or 4 years with in the US, all the legislation that has been promoted, and the challenge that tax professionals have in trying to get the proper guidance. You know, clearly some of this legislation was put out to assist affected taxpayers, but when you look at the legislation, there was oftentimes more questions than there were answers. And I think maybe I'm naive, but I think most tax professionals want to do the right thing. They want to do the right thing for the system. They want to do the right thing for their clients. But sometimes you don't know what the right thing is because there is no guidance.
Carlos.
And in addition to that, the ever-changing nature of tax law actually further difficults the search for guidance in case law, in the jurisprudence. By the time a tax court makes a ruling on a particular issue arising by a given regulation, actually this regulation has been already repealed, changed somehow, and then it becomes more of a referential value than actual guidance on what to do or what not to do in specific circumstances. So try to close the gap between considering that the ever-changing nature of tax law may never be changed. Maybe something that could be done in this regard is to try to close the gap between the regulation and the effective decision of courts involving tax situations.
Jens.
I think complexity, as you mentioned, is another threat to the fundamental principles. So in the code of ethics, I think I'm not talking on the technicalities, how to do it, you have to consult, etc. But there is a certain thought process, even in unknown areas, how to find a proper way through this complexity. First, to understand that there is a complexity. That was my point I mentioned earlier. That is very important. And then to know how to navigate through an area of uncertainty. That means you can make consultations. You have to inform your client. You have to discuss with your client. You have to document. There are in certain jurisdictions systems you can make rulings or ask for rulings, all this type of, I'm not saying that it is easy, it's more difficult now, but I think it's important that a principle-based code of ethics, for example, is able to navigate even in unknown new situations, because otherwise we would have a code where the nitty-gritty issues are regulated, but they are not appropriate, as Henry mentioned, because new issues are occurring. Or Carlos, as you mentioned, the tax law is becoming more and more integrated in other areas, ESG, subsidies for COVID, etc. So by that, I think it's even more important to have a proper, how to say, orientation in a code, how to address complex situations.
Daniel, I saw you had your.
Well, I just might add that there's a sort of the distinction between complexity and then vagueness. So if you do go to principles, then you wind up with a vagueness type of issue. But what one of the comments that I was taken with was Nina's comment of what do you do when your client says, I read an article and only 1% of the people get audited. And now the question is, are you trying to predict for your client what's likely to happen to them if they take a certain position? Or are you trying to advise them what the proper position is to take, even though it's not cost effective? And it seems once you go down the road of just trying to explain to them what the likely consequences of alternative filings are, that's a slippery slope in which you do whatever you can get away with. And if you can find some kind of a tax advisor out there that will give you some kind of a comment that this is a legitimate perspective, now you're out of the criminal docket and over in the civil docket, and everything becomes a calculation. And since people like money, we really are in the Wild West. So to the extent that we can get maybe a little bit more invigoration into the anti-avoidance rules, economic substance doctrines recently codified in the U.S. It's in virtually every country around the world. But yet somehow these principled documents out there, or these simple rules are not, or standards, are not being employed aggressively by the courts because of their formalism and their unwillingness to be more pragmatic in their approaches. Then we really have to count. If you're going to be telling I'm rambling a little bit, but if you're going to be telling telling your client what's the likely consequences, you have to tell them all of that, I would suppose. And it might lead to taking an aggressive position that is likely to not prevail, but you also know it's likely not to be challenged, and therefore you take the position anyway.
So actually, Daniel, that picks up on something. Certainly in the U.S., there's an active debate over the degree to which tax advisors can discuss or answer questions about the audit lottery effectively with their clients. And with some, I think, expressing real concern, once you start having the conversation, it becomes exactly the slippery slope you discussed, Daniel. Others saying they're two separate questions. I can honestly and should answer any question they have about the process and possible litigation, audit, et cetera, but separately also say to them, the only position I can support, stand behind, recommend, write a letter on is X, and try to parse those two. A really active debate for us here in the US on this. So we've hit the 11 o'clock hour. We've just had a question or two come in. I'm going to roll those into our second session. I also had wanted to ask a little bit about whistleblower legislation rolling into this, but not enough time. So we'll get to that in our second panel. So thank you, everyone, for joining us for the first one. We'll take a 15-minute break, and then we'll return my time, 11:15, elsewhere, quarter past the hour. And so we'll see you shortly.